As the morning light grows, the world begins to stir. The quiet focus of the early hours gives way to momentum. London is about to open, and with it comes the pulse that defines the trading day. For a trader, this is the moment when preparation meets reality. Liquidity begins to build as the largest financial centers in the world come online. Orders from institutions, banks, and funds flow into the market. Spreads begin to tighten, and the charts come alive with movement. The trader sits ready, watching the screen shift from calm to activity. Pairs like EUR/USD, GBP/USD, and EUR/GBP begin to move. This is not random volatility. It is the release of pressure that built up overnight as markets waited for volume to return. The first task is observation. The trader looks for the market's intention. Are prices breaking above the overnight range, suggesting early strength? Or are they slipping below support, revealing weakness? Each move tells a story, and every candle reveals a clue. Momentum builds quickly in these hours. The trader checks volume readings, noting where participation spikes. They look at how price reacts around key levels drawn earlier in the morning. If liquidity forms in one area and fades in another, it signals where institutions are positioning. This is where understanding order flow becomes essential. As London opens, volatility increases, not just in currencies but across markets. Gold begins to respond to European flows, often mirroring or opposing the movement of major pairs. When the euro rises, gold may soften. When the pound falls, gold might attract safety-driven buyers. Correlations matter, and in these hours, they shift rapidly. The trader's focus sharpens. They are no longer reading the story, they are part of it. Every decision now must be precise. A few pips gained or lost can define the session. Patience is still critical, but so is timing. When liquidity is at its peak, the best opportunities appear and disappear in seconds. They watch the spreads tighten as brokers and banks adjust pricing. They see clusters of volume forming at the highs and lows of the range. These are signs that large players are active. Some defend positions, others push to create new ones. The trader knows that being aware of these dynamics often matters more than reacting to them. Once the initial surge of volatility settles, patterns begin to emerge. The trader studies whether the price is holding its breakout or showing signs of reversal. This period is often when direction for the rest of the day takes shape. A strong move during the London morning can carry into New York if the fundamentals align. Still, they remain cautious. For every trader who captures opportunity in this window, there is another who trades too soon, too large, or without context. The difference is not luck. It is preparation and control. By mid-morning, the charts reveal their rhythm. The trader has either taken a position or chosen to wait. Sometimes the best decision is restraint. Sometimes it is to let the market show its full hand before joining the move. Outside, the day has fully begun. Inside, the trader feels the pulse of the market flowing across the screens. Every tick, every shift in momentum carries meaning. This is the heart of the trading day, where opportunity and discipline meet. As London reaches full stride, the trader adjusts their focus again, now watching for continuation or exhaustion. The goal is not to predict the next move, but to align with what the market is already telling them. This is the London Open. This is where liquidity meets purpose, and preparation turns into execution. This is market sessions with Vestra. Trading involves risk, and returns are never guaranteed. But understanding how each session shapes the next helps you approach the market with greater awareness, balance, and insight. At Vestra, we believe that true knowledge is what connects patience with opportunity. Content is for educational purposes only, not financial advice. FSP number 54,718.